lot going on in the world of electric vehicles these days. Zero-emission EVs, SUVs, and even EV pickup trucks are also on the minds of all automakers, including American car manufacturers. In today's video, we will look at the top 7 most anticipated American-made EVs arriving by 2022. Number 7. Ford Mustang Mach-E. Ford Mustang Mach-E is a stylish and accessible vehicle with an attention-grabbing design. Mach-E is the company's first all-electric crossover. The 5-passenger cabin is fitted with unique storage and cargo solutions. 2 battery sizes are available, and it comes with either rear or an all-wheel drive configuration. A standard 75.7 kilowatt-hour battery pack and an extended 98.8 kilowatt-hour pack feed an electric motor on the front axle or a dual motor on both axles.
You want to start a business to become a highly successful
Okay, hi everyone. Now just to double check, are you able to hear my voice, right? Okay, let me just make sure that I share my slides. Now, if you can hear my slide, can you just type in the YouTube live chat that you can hear? Maybe you type yes so that I know that you can hear. Okay, so usually for YouTube, there's a bit a slow response, right? But it's okay. While you're responding, I want you to just look at the slides over here, just to let you know that a couple of weeks ago, we have revamped our YouTube. And if you look at the slides over here, you can see a QR code. So in other words, moving forward, right? Oh, thank you. So there are quite a number of people. So if you wanted to learn more about value investing, you can always use your phone to scan this QR code and then make sure that you subscribe to our YouTube channel. So right now we have about 2,800 subscribers, right? So our goal is to turn 2,800 subscribers, right, to 2.8 million subscribers. So we really have a long way to go, and every single subscription count. Yeah. So you can see how aggressive we are. 2008 to 2.8 million. Okay, got it? Yeah, Lucy say loud and clear. Okay, awesome. So remember to scan, right? Yeah. If you don't scan, I will stop the video. Okay, just kidding. So let's get started, right? Once you scan, you'll be able to, subscribe to our YouTube channel, and every time when we produce new, fresh, and relevant content, right, you'll be able to watch our videos. Now, so the topic for the day is really very interesting. It talks about a deep. Is it on? Oh, they say they can hear, right? They can hear but not seeing the slide. So maybe let me just share the slide one more time, right? Yeah, I'm sharing the slide right now. But it's okay, right? Yeah, correct. So from the YouTube, I can really see the slides. Is the audio clear? Is it okay right now? Okay, good. Yep. Okay, so let's get started. So where was I, right? Yeah. So for this evening, it's going to be very exciting because for the next maybe 1 hour plus or so, we're going to focus on an interesting topic called the deep dive into Tesla as well as the electronic vehicle industry. And then right in the very beginning, we have played a very short video talking about, showing the different types of electric vehicle, right? Yeah. So if you have a driving license, you love cars, all this will be pretty interesting, huh? And then for the past 2 years, Tesla is really all the rage right now because everybody is jumping into Tesla. So is Tesla really a good company to invest in? But before that, let me just share some disclaimer. So in the next maybe 30 seconds, just pardon me, right? I'm just going to read out some of the key things here. So remember, the purpose of our illustration or our webinar tonight is solely to illustrate the application, right, of value investing methodology. Yeah. And of course, a various valuation method in the context of real-life companies, and in our context tonight is Tesla. So remember, under no circumstances does any information provided in the presentation tonight, right, represent a recommendation to buy, sell, or hold any stocks. Yeah. So remember, right, because I do not see you, you may not talk to me. Just take note, the illustration this evening do not take into account the individual characteristic, profile, or the risk appetite of a given investor, which is you. So remember, in no event shall VIA, which is us, or any of our presenters here, right, is that are liable to any viewers, guests, third party for any damages of any kind arising of the use of any content shared here. So remember, neither My Kinesis Investments, Value Investing Academy VIA, nor the authors of tonight's webinar are operated by or affiliated with any broker, dealer, or licensed financial advisor. So just take note. Now, past performance is a poor indicator. For future performance is always for reference only. And just take note, neither VIA nor the authors tonight makes any representation or warranty as to the completeness or accuracy of the information presented in our webinar today. Okay, good. So let's get started, right? Now, the agenda tonight will be quite interesting. It's divided into two portions, right? So part one, we're going to talk about the electric vehicle industry. So that's part one. And then part two, we're going to specifically talk about Tesla. I think this is what most people are really looking out for, right? But before we start, I just want to give credit to our equity research analyst, Raina, because she did all the research work. There's a tons of work, and she did all the slides. Yeah, which makes my life very easy, right? Because my role is just to use her slides. Yeah, so credit given to her. And of course, for tonight, we have two team members with us who are helping with the, the technical aspect of things. Yeah, thank you. Yeah, so that, you all can watch the live session. Yeah, so I can see, right? Yeah, okay, good. Everything is loud and clear. So let's get started, right? So before we talk about Tesla, let's take a few steps back and then look at the entire big picture, which is the electric vehicle industry. So here are the topics that we're going to talk about. So let's get started on the first one, which is the global electric vehicle sales trend. So since electric vehicles are all the hype right now, so how is the trend like? So let me just share with you some information, right? If you look at this slide, there are a lot of histogram that goes up, right? But focus on this light blue over here, because the light blue histogram, right, represent the battery electric vehicle. Yeah. And the green one, right, are the sales share, right, of new electric cars, and of course the slightly dark blue one, the plug-in electric vehicle. But in short, what this graph is trying to say is the electric vehicle penetration, right, is the highest in Europe and China. And interestingly, in 2020, which is last year, right, China had the largest electric vehicle fleets in the world. Yeah. And in 2020, there was a 43% rise in the global electric vehicle stock over 2019. Now, in short, the overall electric vehicle sales are rising. So that's the summary. And if we zoom in, right, into the detail, right, which is the sales in the Europe. Now, in this histogram, it talks about Netherlands, Sweden, Norway. Predominantly, these are the three countries in Europe that we'll talk about. Now, let me just list out all. So you can see here that the overall car market shrunk 22%. So in other words, the overall car sales shrunk. But interestingly, the electric vehicle sales, right, was more than double from the last year. Yeah. So in short, EV sales have gone up. And if you look at this, right, another more info, this is US market, this is Europe, right? So in the US car market, it contracted 23% in 2020. But again, the EV sales fell less than the rest of the auto market. So in short, the EV sales are going up, and if it falls, right, it falls lesser as compared to the overall total car sales. Yeah. Now, so if you just look at some of the articles, let's say in the public domain, you may notice, right, every major auto mobile manufacturer, including Tesla, right, are venturing into EV space. And one of the key reasons why venturing into EV space is very attractive, because also partly governments are giving a fiscal incentive, right, to help the companies. So this is one, how should I say, like accelerating factor. Yeah. And if you look at this graph, you can see, right, according to this IEA, right, what does IEA stands for? IEA stands for International, let me just move my mouse to the lower right hand corner, right? It stands for International Energy Agency. So what does this IEA says? IEA says that consumers spend 50% more on EVs, than in 2019. So again, EV sales are going up, and of course, at the same time, right, government has seen a rise in spending, right, on electric vehicles. So again, these are evidence to support that the electric vehicle here most likely is here to stay, and then not only that, they are up on increasing trend. So that is for number one. What is the global EV sales trend? Up. So now the next question is, we're going to zoom in, right, to talk about what is an electric vehicle. So before Reina did all the research over here, I thought that electric vehicle, there's only one type and one and only. It's either the fuel run vehicle, right, or the electric vehicle. But you'll be surprised. Now, there are three main types of electric vehicles, and as you can see over here, right, the electric vehicles can be separated in three types. One is called a hybrid electric vehicle. One is called a plug-in hybrid electric vehicles, and then the third one is the battery. So initially, when I look at these three classification, right, I wanted to search some pictures and see whether am I able to differentiate the three types of electric vehicles from the outside. So let me just show you the three pictures. This is the HEV, hybrid electric vehicle. It's a PHEV, you know, a lot of acronyms, right? And this is the BEV. Now, if I remove all the labeling, right, and I look at these three pictures, actually I couldn't differentiate what is what. That means from external, it's quite really difficult for you to differentiate which one is the hybrid or the plug-in and so on. So now, when we are talking about three types of electric vehicles, right, I mean, so what's the difference between these three? Now remember, right, when people talk about electric vehicles, they may be talking about any of these three or a combination of these three. Now, so let me just list out what's the difference, right? Now, here is quite a bit of words. Now, the conventional cars that we see, right, the engine, right, is called ICE in short form. So I stands for internal combustion engine. Yeah. So a hybrid, as the name implies, it combines the traditional ICE plus electric motor and a battery pack. And if you can see here, right, can you see the hybrid? This picture over here, can you see? Okay, this is the traditional ICE, right, plus a bit of battery. Okay, and this is the conventional. Of course, it relies solely on fuel. Now, on the other hand, for the plug-in hybrid electric vehicle, right, so same thing, it still consists of ICE, but the interesting thing is the battery pack, right, is larger. And if you look at this picture over here, do you realize that this fuel shrunk and the battery goes up? Yeah, so this is the hybrid, and this is the plug-in hybrid. Okay, plug-in hybrid. And the last one, I suppose this is the one that most people talks about, right, which is the full electric vehicle, right? And this is called battery electric vehicles, a BEV. So can you see here? They are powered exclusively by electricity only. They do not have an ICE, which means if you look at this picture over here, it's just a battery only, and there's no, ICE. Yeah. So I guess when people talk about electric vehicle, usually they're referring to this, even though there's actually a hybrid as well as a plug-in hybrid. Yeah. Now, so we have covered the three types of electric vehicles. Now, slowly we're going to transition to the ultimate part, right, where most investors will be interested in. So let's go to number 3, right? So in order for us to, any companies to produce these electric vehicles, right, the question is, what are the raw materials used for this electric vehicle? Now, this is one article that is extracted from this website called the mining.com. This is a hypothetical one, right? Now, where the hypothesis is if Tesla requires to build 20 million cars per year, the question is, what are the raw materials that's required to make this Tesla vehicle? So you can see some of the materials such as graphite, copper, and the whole list goes on, right? But in summary, right, if you look at the right side, these are the raw materials that are required to make an electric vehicle. So now the question is, okay, I want to buy an electric vehicle, and there's some raw materials that are required to make this electric vehicle. So, but what does it mean in the investment sense, right? Now, I intentionally put this picture over here. I want you to imagine, right? Let's say this guy. I mean, everybody knows, like, this guy is called Elon Musk, and is the market leader in producing electric vehicles. And just now we already know these are the raw materials they are required to produce these electric vehicles. Yeah, but remember, right, we must understand that Elon Musk do not own any mining company to mine these raw materials, which means that in order to produce his electric vehicles, these raw materials has to come from somewhere. So now the question is predominantly which country, right, does all these raw materials come from? Now look at this cute picture, right? Tom. Okay, everybody know this, So in short, Asia dominates the manufacturing of lithium-ion batteries, which is 80%. So here we're talking about Asia. And then just now I put Xi Jinping's picture, right? Is because China accounts for over 60% of the world's battery capacities. So since electric vehicle requires battery, right? So you realize that China accounts for over 60%. Now there's some faint word over here, so you can see here, China accounts for more than 60% of the world battery capacity. Now, and if we zoom in, right, since China takes up about 60% of the world battery capacity, so if you look at the battery specific, right, the raw material, what kind of combination of materials are really the best combination to produce this EV? So just to let you know that the lithium cobalt combination, right, are generally preferred, which means, and one of the key reasons why cobalt is preferred to be used to produce this battery, right, is because of all this high recyclability, longer lifespan, high thermal stability, and so on. Safety, low weight, high energy density. So the picture on the right is just a picture of cobalt. Yeah, so raw materials required to make the battery. So now the question is, where does the raw materials come from? Now, in order for them to get the lithium, the cobalt, and somewhere, they have to come from somewhere. And predominantly it comes from mining. Yeah, so sometimes there are some argument, right? So since electric vehicles seems to be have a positive impact on the climate change, because you're talking about electricity, right? So now the debate is always, are we changing from a fuel intensive, right, to a material intensive energy system? So in short, are we shifting the problem, right, from the left pocket, right, to the right pocket? So in other words, we are not solving a problem, but we are shifting the problem. So now the question is, if we are shifting the problem, so the problem may be as serious as, you know, the so-called the cotton issue, right, at Xinjiang, right? Yeah. So now the thing is, if it's really material intensive, so where does this lithium comes from? Now, from the slide, you can see that 75% of the world's lithium, right, is concentrated in Argentina, Bolivia, as well as Chile, and this place called the Democratic Republic of the Congo is the world dominant source of cobalt, which is 65%. So that's really a lot. It's almost 2/3, right? And since extracting, right, the lithium requires mining operation. So now, of course, it goes to the part is, are there some environmental degradation of the environment? Remember, right? Are we shifting the problem from fuel intensive to the material intensive energy system? And are there any human rights issue? So let me just show you this article. This article is a bit old. It's on the 5th of September 2019. As the heading says, a demand for battery, metals, renewables, fueling rights violation. So there's a report. If you just Google a similar title, right, you will see a lot of articles talking about human rights issue. And of course, sometimes on the social media, right, you may see videos where children, can you see here? Let me just highlight this. Children mining. Yeah, so are we really solving the problem, or are we creating the problem elsewhere? So of course, the lithium cobalt combination remains the optimum technology. And again, this picture shows that, you know, this human rights issue, are we really creating more human rights issue or less? And of course, because of this human rights issues, so car makers are trying to, you know, reduce this cobalt content. And these are some of the reasons why they want to reduce, because it's expensive. And just now we're talking about the mining, right, associated with child labor, tough condition, and corruption. So even though they want to make money by selling electric vehicles, but yet, you know, they want to strike a balance between profit, right, as well as a human right issue, of course, the environmental impact. Yeah. So now the part is, we already know that EV sales goes up. Electric vehicle consists of 3 types, and out of every electric vehicles, right, we know the different raw materials, and most of it have to be dug, right, some mining operation. So now the key thing is, assuming that no environmental issues exist, yeah, and you're interested in buying, right, or owning an electric vehicle. So how much does it cost in owning an electric vehicle? So these are some information, right? Yeah. Now, so predominantly, if you buy an electric vehicle, 3 expenses, right, are involved. One is the fuel, yeah. One is the maintenance, and one is the insurance, yeah, insurance. So these are 3 main expenses that are related to owning an electric vehicle. And these are some information. Over here, you can see, like for example, a minivan, this is the amount of cost, this is the amount of cost, and so on. But we must understand the cost of ownership, right? I think this is a study done in US. Yeah, because in Singapore, I don't think you can spend 10,000 and can get a car, right? So I don't think so. Yeah, but maybe you can get the wheel of the electric vehicle. But I don't think 10,000 is sufficient. Yeah, sufficient, yeah. But of course, the point we wanted to make is, right now, electric vehicle is a new thing. But as time passes, when there is economy of scale, when car manufacturers become more and more efficient, right, we expect the EV prices to fall gradually. And of course, the last part is the tax incentive, right, and the rebates given by various governments will definitely help. Now, and just to let you know that just now we talked about the electric cars, right? And since electric cars are predominantly a portion of the ICE, right, and then a portion by the battery. Now, this is just to let you know that the battery make up a third of the electric car cost. So what does it mean? It simply means that in order for these EV sales to be sustainable, right, it would be great if they can reduce the battery cost, since battery takes up 1/3 of the car's cost. But of course, as time passes, like I say, when car manufacturers become more and more efficient in manufacturing electric vehicles, right, we should see a downward trend of the car cost. Yeah. But the most exciting thing is, quick revision, global EV sales go up. 3 types of electric vehicles, raw materials, lithium, cobalt. Lithium, cobalt is the best preferred. Cost in only an EV, just now we talked about some numbers, but predominantly it's for US, right? But we are slowly, aging to the part, into the part where, we're talking about who are the players that are predominantly involved in the EV industry. Of course, before I talk about this, everybody will say Tesla. But we must understand that in the world of capitalism, right, when other companies see Tesla is doing well, they also want to be a part of it. So who are the key players? Now, if you look at this list, you realize that not only we have included Tesla, there are Volkswagen, General Motors, and the whole list go on. Everybody want to jump into this bandwagon, right? Yeah. And if I show this graph over here, right, now you may notice that currently the largest market share is 15% by Tesla. Now, but do you realize that the second player, which is the Volkswagen Group, right, is 13%? The next one, the SGMW, I think it's a combination of a few, right, over here. SGMW is a combination of SAIC, General Motors, and Wuling. But the key thing is you look at the second one. Now, before Reina did all this research, right, I had this notion that maybe Tesla has so much market share, right, that the rest are really falling behind. But looking at the numbers, I mean, the facts speak for itself, because even though Tesla is the market leader, but this Volkswagen, right, is not very far behind. And do not be surprised that one day this Volkswagen may take over Tesla. Yeah, so Tesla, yes, is the market leader, but the second place is just right behind Tesla. So be very careful if you think that Tesla is almighty, right? Everybody is very far away. So now the key thing is what lies ahead in the electric vehicle industry. Now, these are some key points. Now, just take note, right? Just now I already said that electric vehicle sales will eventually overtake the traditional vehicle sales. And of course, in order for it to overtake the traditional vehicle sales, right, there are a few factors, there are a few moving parts. The first moving part is, of course, the price of EV. If the price goes down, then more people will want to buy electric vehicles instead of the traditional ICE vehicle. And of course, the charging infrastructure. Now, for the traditional vehicles, that we have this petrol station over here. But in Singapore, I think, I don't own an electric vehicle, but in order for you to own an electric vehicle, there must be a charging station. So the question is, in order to establish this infrastructure, right, there's cost involved and so on. So if the government can increase the building of such infrastructure, that will help in the adoption, right, of electric vehicle. And of course, the price of the EV also, depend on a couple of things, the government subsidies And just now we talked about the battery, right? The cost of manufacturing a battery, which is 1/3 of the entire whole electric vehicle. So moving forward, I think my gut feel is electric vehicle is here to stay. But how far this electric vehicle goes, it all depends on the factors that are listed here. Then, of course, the most juicy thing, right? Juicy thing is this. Yeah, so if electric vehicles are here to stay, and there's a high probability that the sales of electric vehicle will continue to go up, right? So investors may think, should I jump into this? Yeah. So if I really want to jump into this, so what are the things that we can look at? So this is the juicy part, right? Juicy part, huh? Now, so how can investors take advantage of this? Yeah. So I think let's list out some of the companies that play a part in this entire supply chain. So let's look at the electric vehicle manufacturer. For example, Tesla, everybody know, and the so-called China Tesla, which is new. And then this one you may not have heard before, right? Simoto, Workhorse Group, and so on. So these are some of the companies that you can do more research for electric vehicle manufacturer. But remember, they are the manufacturer. They are right at the bottom of the supply chain, right? How about the upstream? Upstream, right? If you look at the upstream, we must understand that there are many other companies that play a role, to form this entire electric vehicle industry. For example, electric vehicle requires a semiconductor chip, right? So who are the players? For example, NXPI, a Skyworks Solution, some of you may heard before, and the most popular is Taiwan Semiconductor Manufacturing. They are the largest semiconductor manufacturing firm in the world. And of course, they work with the AMD, right? AMD, And then battery again, requires the lithium cobalt combination. How about looking at the producers of metals? And then we have this Ganfeng Lithium Co. And this is the ticker symbol. And of course, the battery makers. Yeah, and these are the numbers over here, 300,750.SZ and so on. So if you want, maybe I leave this screen over here, right? Maybe you want to take a screenshot of this. But don't worry, the video will be left in our YouTube channel. Yeah, Jermaine say excited to watch. VTech, more people can afford EV. COE will fly to the moon. That one is Singapore. Oh, just take note at the bottom, right? Remember, this is not investment advice, right? Don't anyhow press buy, right? Yeah, without knowing what is it all about. Okay, good. Have you taken a screenshot? Okay, so this is the individual company. But bear in mind that in order for us to do research on individual company, it's not easy because in case some of you, right, are not our value investing graduate, you may not know how to analyze, calculate the valuation, and so on. Now, if that's the case, there's something that you can explore and do research on is ETF. Now, ETF stands for Exchange Traded Funds. So now the question is, if we go back over here, right, the entire supply chain, are there these ETFs, right, that relates to a certain portion of the supply chain? Now, I'm just going to list it out without reading out, right? So these are some of the possible ETF that you can look into it. Yeah, of course, the last one, for those people who know the lady, right, the ARK ETF, ARKK. So I'm going to leave this slide over here, maybe a couple of seconds so that you can take a screenshot of this. Yeah. So just now I've covered the industry as a whole and then some of the companies that they look into, but it requires effort, right, to analyze. And of course, these are the ETFs you can explore, right? Yeah. Remember, this is not investment advice, right? So let's do a quick summary. Yeah. Now, number one, global EV sales trend based on the past, yes, it has gone up. What is an electric vehicle? Just now we talked about three types, right? Three types, the various combination of ICE as well as the battery pack. And then the raw materials, the whole list goes on. Yeah, there's a list, right? And of course, lithium cobalt is the combination. And remember, right, the battery takes up 1/3 of the cost to produce one single electric vehicle. And just now I did a very quick intro about the cost involved with only an electric vehicle. In Singapore, once it becomes more prevalent, then we have a very clear idea of what the cost involved. And of course, the players involved in the EV industry, the market leader is still Tesla, and there's someone running behind, smelling the breath of Tesla, right? That's Volkswagen. Yeah, this is 15% and this is 14%. So be very careful, right, to have this notion that Tesla is is everything, and everybody is cast behind. Be very careful, right? Of course, what lies ahead, we talk about the adoption, infrastructure, government incentive, and so on. And the investors taking advantage, we have listed out some of the individual companies, but it requires some skills. And of course, we talk about the ETFs. ETFs, huh?
Thank you, Cayden. Good evening, everybody. My name is Reena, and let's explore this formidable force in the EV space, which is Tesla. So some people love and adore this company, while some are still skeptic about it. So let's see what it is all about. So let me begin with telling you about a little about Tesla. So this company was founded in 2003 by Americans Martin Eberhard and Mark Tarpenning. And Tesla is an American manufacturer of electric automobiles, solar panels and batteries for cars, and home power storage solutions. The company was named after the inventor Nikola Tesla, who is best known for his contributions to the production, transmission, and application of electric power. The company is headquartered in Palo Alto, California, although 3 days back Musk has announced that his plans to move the headquarters to Texas, where Tesla is building a massive car and battery complex. They are moving because California has relatively high taxes and high living costs as well. So in 2008, Tesla released its first car, the Roadster. This was an all-electric car which could travel 394 kilometers on a single charge, and it had a performance comparable to many gas-powered sports cars. However, it had a price tag of $109,000, which made it a luxury car. And in 2008, Elon Musk became CEO of Tesla. And in 2010, the company was listed in the US stock exchange, and it raised approximately $226 million. After which the company sold approximately 2,500 Roadsters before ending its production in January of 2012. Now let's talk about the factories of Tesla. It has a factory in Fremont, California, which is spread across 5.3 million square feet. It also has a gigafactory in Sparks, Nevada, which it started building in June 2014. To ramp production to 500,000 cars per year, this gigafactory will produce enough batteries to support Tesla's demand. Currently, it produces Model 3 electric motors and battery packs, as well as the Powerwall and the Power Pack. The next factory that we are going to talk about is the Gigafactory 2, which is a 1.2 million square feet facility in Buffalo, New York, where it produces the solar cells and the solar panels. And it has a Gigafactory 3 in Shanghai, China. This factory spans 9.3 million square feet, and it currently hosts the final assembly of Tesla's Model 3 and the production of Model Y. Now let's move on to the revenue breakdown. So Tesla has three main segments, as we can see: the automotive segment, the services segment, and the energy generation and storage. So this picture here shows that as on December 2020, automotive sales, which also includes automotive leasing, constituted 86% of the total revenues, followed by the services segment, which constituted 7% of the revenues, and then 6% for the energy segment. Now from this table here, we can see that the automotive segment used to contribute a higher percentage to revenue. For example, in the first column, you can see that in 2015, it contributed approximately 92%. And this has fallen gradually in the following years, and this share may be expected to fall further as other segments gain traction. The energy segment is still a small and growing segment in Tesla's business model, and it contributes only 6%. And this segment is also expected to outgrow the services segment going forward as the demand for low emission renewable energy grows. Now let's talk about the products which Tesla produces in its automotive segment. So first we have the Model S, which is an all-electric luxury sedan, and it has the longest range of an EV. Next, we have the Model X. This is an all-electric luxury SUV. It has these unique falcon wing doors and a touchscreen panel inside, which truly makes it look like a car from the future. And we also have the Model 3. This is an affordable alternative to Model S, and it is in fact the most affordable car of Tesla. And Tesla also produces the Model Y. This is a compact SUV and it can carry 5 passengers along with their cargo. Now, other models announced by Tesla are the second generation Roadster, the Tesla Semi, which is an all-electric semi-trailer truck, and we also have the Cybertruck, which is a pickup truck with an angular design and a very unique steel construction. Now, let's talk about the products which Tesla produces in its energy segment. So, Tesla acquired a solar energy company called SolarCity in 2016. This was added to Tesla's clean energy subsidiary Tesla Energy, and this is headquartered in Fremont, California. So, the current energy generation products include the solar panels. Now, Tesla does not manufacture these itself. As of 2021, the company uses panels built by Hanwha Q cells from Seoul, South Korea. Then the Tesla solar roof. So Tesla manufactures, sells, installs these solar shingles, which are solar panels designed to function as roofing materials while also producing electricity. And then we have the Tesla solar inverter. It basically converts the variable direct current into alternating current, which can be fed into a commercial electrical grid or used by a local off-grid electrical network. And next in the products in the energy segment is the battery and the energy storage products. So under this, Tesla has the Powerwall, which is a rechargeable lithium-ion battery which is intended to be used for home storage. And we have the Power Pack and the Mega Pack, which is a large-scale rechargeable lithium-ion battery intended to be used by businesses or an electric utility company. So, moving on to the financials for Tesla. First, we will talk about the revenue of the automotive segment. So, as we can see from the chart here that Tesla's automotive revenue grew by 31%, and this was primarily due to an increase of Model 3 and Model Y deliveries despite production limitations due to COVID, which happened in the first half of 2020. And next is the revenue from the energy segment. So, as is evident from the chart here, we can see that in 2019, the revenue from the energy segment fell by 2%. This was due to decreases in deployments of solar cash and loan jobs, which is basically when Tesla provides financing options for putting up a solar energy system for users. And in 2020, we can see that the energy segment grew by 30%, which was mainly because of increased deployment of mega packs. Moving on to the revenue from the services segment. So we can see that the revenue from the services segment was lagging in growth with just a 4% growth in 2020. Now, talking about deliveries, Tesla produced and delivered approximately 500,000 vehicles in 2020, and this was 36% higher than last year's 367,000 deliveries. So we can see that this graph is like upward moving. So we can see that the deliveries for Tesla has constantly been growing. And then on this graph, we can see that the vehicle sales of Tesla have been growing steadily every year since 2016. So in 2021, for the first 2 quarters, the company has already produced approximately 386,000 vehicles and delivered approximately 181 vehicles. And it looks like it is on track to exceed the 2020 sales in this year, in 2021. Now, over a multi-year horizon, Tesla expects to achieve 50% average annual growth in vehicle deliveries. So, So talking about the total revenue, we can see from this chart that the revenue has grown at a breakneck speed, which is where we have calculated that it is a CAGR of 50%. So it was $4 billion in 2015, and it has grown to approximately $30 billion in 2020. So we can see the speed of the growth of the earnings in Tesla. And then we have the, now we are comparing the total revenue of Tesla with its peers. So we can see that Tesla is still far behind its peers in terms of annual revenue. So, so the blue line represents Tesla, and the orange and the gray bars represent Ford Motor and General Motors respectively. So we can see that in 2020, Ford Motors and General Motors each have approximately $120 billion in annual revenue compared to just $30 billion for Tesla. So many may say that Tesla's growth story has just begun, but you should make your own analysis and decision regarding this. And moving on to gross profits and gross margins. So we see from this chart that gross margins for 2020 is 21%, which has increased from 17% in 2019. Now, the improvement in gross margin is because of lower material, manufacturing, freight and duty costs from localized procurement and manufacturing in China, and higher margins from Model Y as well, and increased operational efficiencies in the services segment. On the other hand, gross margins for the energy business decreased from 12% to 1%. And this was due to higher proportion of solar roof in the product mix, which is a low margin product. So yeah, and then moving on to the operating profit and the operating margins, you can see from the chart here that Tesla has finally made a positive operating profit only in 2019 here, and the operating profit increased in 2020 to $1.9 billion, which translates to a 6% operating margin. Now, according to Tesla, it expects its operating margin to continue expanding, eventually reaching industry-leading levels with capacity expansion and localization plans underway. Now, talking about the net income and the net margins, the company has reported its first full year of profitability in 2020 with a net income of $690 million. However, this is important to note that it earned a revenue of $1,580 million from selling regulatory credits, without which the company would still be in the red. So let's talk about these regulatory credits. What are regulatory credits? So in a bid to reduce carbon emissions, governments around the world have issued incentives under which credits are awarded to automakers that manufacture and sell zero-emission vehicles. And each car maker is required to meet a target number of credits each year, and if they fail to meet that target, then they may purchase these credits from other companies which have excess of these credits. So since Tesla only makes all electric cars, it always has excess credits, and it can sell them at 100% profit to traditional automakers. So this regulatory credit revenue is pure profit for Tesla. Now, as we can see from this table, the revenue from regulatory credits constituted 5% of the total revenue for 2020 and 5.8% of the automotive revenue, and moreover, it was 228% of the net income for the year 2020 also. So Tesla's reliance on these regulatory credits for generating revenue is also seen as a red flag by some investors and analysts. So now moving on to the free cash flows for Tesla, we see that the free cash flow, that is operating cash flow minus the capital expenditures, this has been negative for many years. Now you can see this is the zero line, and the green line has been below the zero line for many years, and it has finally turned positive in somewhere around 2019, and the free cash flow in 2020 soared approximately 170% from 2019. And according to the management, they have sufficient liquidity to fund their product roadmap and long-term expansions going forward. Now, talking about the stock dilution. So this chart shows the quarterly diluted shares outstanding of Tesla from 2015 to the latest quarter in 2021. The blue bars, they represent the quarterly shares outstanding, and the yellow line represents the growth in the shares outstanding. So in the long term, the outstanding shares at Tesla have grown significantly in the past 5 years, as we can see. So over the years, Tesla has issued a lot of shares to raise money for the production of Model X, also for the production of Model 3, and for acquisitions like Solar City, and it has also given equity incentives to its employees, and it has also issued shares to raise cash to further strengthen the balance sheet. So we can see that Tesla has been continuously issuing common stock to raise funds, and the shares outstanding may rise going forward also, which will result in stock dilution. Now, what that means is that an existing shareholder will own a lower percentage of the company with every successive issue of stock. So that is a point to be kept in mind. And then moving on to the debt and interest for Tesla, we see that from this graph, the grey bars represent the quarterly total long-term liabilities on a quarterly basis, and the orange line represents the interest expense on a quarterly basis for Tesla. So this chart, by the end of 2020, we can see that it has incurred more than $700 million in interest expense. Now, this is about 9% higher than the interest expense for 2019. And next, we can see that the total long-term liabilities of Tesla were at $14.8 billion in December 2020. And however, this has declined in the subsequent quarters to reach $13 billion approximately in June 2021. Now, talking about the debt to equity ratio, the debt to equity ratio as shown in this chart signifies that the debt has been declining since recent quarters, which is a good sign. This may be because the company has switched to other alternatives. For example, we saw the stock dilution happening, so it may be resorting to equity to raise cash or even its own earnings. So now we will talk about the market capitalization. So just for your information, market capitalization is the number of shares outstanding into the current market price of the company. So Tesla produces only a fraction of the vehicles as compared to established global players. Even then, its market cap is nearly 2.5 times that of Toyota, which you can see in this graph, and it is nearly 10 times that of GM, and almost 14 times the market cap of Ford, and about 21 times the market cap of Ferrari. So you can see the huge difference in the market cap of Tesla and the other established players in this graph. And everyone knows that the stock price of Tesla has soared since forever. And this year, from March 21, it has soared 116% to reaching $777 on 28 September. But on the last trading day, it was $785. And currently, its PE ratio is hovering around 400 times. And since the company went public, the stock has surged more than 20,000%, turning many early investors into millionaires. Now, this is a valuation snapshot from Morningstar, which states that the fair value of Tesla should be $600 versus the stock price of $775, meaning that the stock is overvalued at a 29% premium. But please note that this is not an investment advice, and please do your own research before hitting the buy button. And so after all this, let me just conclude a few points. Tesla is so there are many reasons for the extreme valuations of Tesla. Tesla is a tech company as well as a car company. Moreover, it is an electric car company. Plus, it is a company which has consistently beat expectations. Then we all know EV is the future, and being the pioneer in electric vehicles, Tesla has the first mover advantage. And many believe in the vision and charisma of Elon Musk, who has inspired a loyal army through his adventures in memes or cryptocurrency or space travel, or even his first venture, which was PayPal. And he has quite an eccentric Twitter feed as well. And the latest quarter from Tesla saw record deliveries of vehicles, and Musk said that we have achieved record production, deliveries, and surpassed over $1 billion in net income for the first time in Tesla's history. And Tesla is constantly expanding its manufacturing capabilities, and it already has a dominant market share in the EV space. But as we all saw in the earlier presentation, that other players are not so far behind, and they are catching up pretty quickly. And EV manufacturing is still at a very nascent stage, and it is constantly evolving with technological advancements and innovations, and it is not necessary that Tesla will remain the market leader going forward. Now, Tesla is also exploring self-driving technologies in its vehicles through autopilot. So it has always put itself as an innovator, and probably that is the reason why it has such a loyal army following it. However, factors like product delays and crash probes, stock dilutions, and the case we mentioned about regulatory credits, these are some drawbacks which make investors nervous about investing in Tesla. So, for any stock, and especially for companies like Tesla, which have such a hype around it, it is better to understand and analyze the company first instead of following the herd. Now I hand it over to Cayden to share his thoughts and take it forward. Thank you.
Okay, thanks, Reina. Just now, Reina has presented quite amount of information about Tesla, especially the part about what Tesla really is. Predominantly, it's an electric vehicle company where most of the money comes from making car vehicles. Of course, there's two small parts where Tesla makes money, but predominantly, right, if you look at the conclusion, it is an electric car company, and there are quite a number of good points, right, such as consistently beating expectation, and then they are part of the future, which are the electric vehicles. And of course, Elon Musk, assuming that he stays healthy, he is highly charismatic, and usually companies that want to put a dent in the universe, right? Strangely, they have a really visionary person as a leader. For example, if you look at Steve Jobs, highly visionary, and so on. And if you look at the electric vehicle industry, it appears that they are still at the infancy stage, and Tesla plays they are part of this. And not only that, they are the forefront, they are the market leader, and so on. So these are the plus points. And if you look at the numbers, right, putting our feelings aside, it appears that the revenue is okay, the net income is okay, the cash flow, everything is okay, at least for the past 1 or 2 years, and the debt is increasing. So it appears that they are like a fast growth company. And just now, when Reina talks about the compounded annual growth rate is at a huge amount of 50%. 50% is really huge, because the last time I saw a company that flies up this fast, right, is Amazon. Yeah, so it's really a fast growth company. But of course, there's one point we need to note is that Tesla there's a huge reliance on this regulatory credits to turn a profit, which means that if we remove this, actually the company is making a loss. So I'm just thinking from an investor's perspective, right? If I'm really keen to look at Tesla, hopefully this is a short-term Panadol, right, where they're just relying this on a short-term money to tie the company through. And it appears that they are still focusing on new technologies such as the self-driving technology to move the company forward. So I would like to see that in the long run, right, there is a lesser reliance on the regulatory credit, and of course, in the long run, for them to really focus on their own electric vehicles. Yeah. But of course, from a value investing perspective, assuming that you derive to a conclusion that, hey, Tesla is a great company, is at the early stage, and right now I want to jump in right before anybody else jump in. But you must take note that if you decided to jump in, just to let you know that there are many people has already jumped in. Why? Because if you look at the PE ratio, right? The PE ratio, like what Reina says, is about 400 plus. But let's assume that it's 400. So what does PE equals to 400 mean, right? It simply means that, 400 is 400 divided by 1. And a P, right, is the price. And then the E is the earnings. So in other words, if Tesla makes $1 of profit, as of today, right, if you press buy, people are paying $400 for this $1 of profit per year. Which also means that we will translate that if you buy Tesla today, right, it takes about 400 years to break even. But of course, a PE ratio is not really the sole and a very good indicator. But if you compare this PE 400 to something else like Amazon and so on, you may find that the PE ratio of Amazon is really on high side as compared to Apple, which is more predictable, Amazon, which is more predictable. Yeah. So just now, Reina has shared that based on the valuation by Morningstar, right? Yeah, the company is overvalued. It's overvalued, huh? So whether should you buy a Tesla or not, I'll just keep you in suspense over here. So it appears that, the fundamental wise, they are doing well. The price wise, based on Morningstar, appears to be overvalued. So this one, I think I leave it to the audience, right? There are about 174 audience who are watching this. So I let you decide. Whether Tesla is something suitable for you. So let's do a very quick summary, right? Because at my part, I really speak very fast because there's so much information to provide. So let's do a very quick summary. I'll just slow down my pace a bit. Now, the agenda for this evening, we talk about the global electric vehicle sales trend. Yeah, summary, right? Uptrend. So that's part number 1. We talk about what is an electric vehicle. So there are 3 types, 1, 2, 3. And of course, the pure electric vehicles purely relies on electric. And just now we talk about the raw materials, right? There are many raw materials, and to make a battery, right? The most popular combination is using a combination of lithium and cobalt. And of course, because lithium and cobalt, it doesn't drop from the sky, right? You have to go through mining and so on. So people talk about environmental issue. Are we shifting the issue from fuel, right, to a environmental degradation? Then of course there's also human right issue. So there's all these things. And then a cost in owning a vehicle, based on some of the numbers, in the long run, as a company become more and more efficient in producing electric vehicles, most likely, right, the cost will decrease. And of course, for the Tesla fan, you already know that Tesla already set up a car showroom, right? You can always go there, have a look. And the players involved in there should be EV, right, industry. There are many players. Tesla is the champion, and then Volkswagen is at the back. But just bearing in mind that they are very, very close. And just now we talk about what lies ahead of the electric vehicle industry. It depends on many factors. Some is, for example, the infrastructure for charging electric vehicle, and also the incentive provided the government. So all this will support the booming of the electric vehicle industry. And of course, how can How can investors take advantage? You can either focus on individual companies in the entire supply chain, right? Starting from the car manufacturer, which is right at the bottom, right, to the semiconductor companies such as TSMC, Taiwan Semiconductor Manufacturer, and of course, for those people who assemble the semiconductor chip. So that's individual companies. And if you have zero experience in analyzing companies, then you may want to focus on ETF, which are exchange-traded funds. And just now, I encourage you to take a screenshot, right? But anyway, just to let you know that this video is, will stay here forever and ever, right? Yeah. So you can always take a screenshot of those information that were presented. And of course, Reina, talks about the Tesla, right? And it all depends on whether Tesla is something to your taste. and then different people has different ways of doing things, right? So if Tesla is something that you really enjoy, but again, you still need to analyze company and putting your hard-earned money into something, right? Whether it's Tesla or any company, it requires knowledge. Huh? So which means that if you put your hard money into something and you don't know, you do not have the knowledge, right? Isn't it as good as gambling? Yeah. Which brings us to my final few slides. Huh? Oh, there is a comment, right? Oh, what interesting. We have a Patterson. Okay, we have quite a number, right? A Tesla PE ratio was 1,200 a few months ago. PE is not a good metric for 50%, which is quite true. I will agree that PE itself is not a good metric for Tesla. So usually for fast growth company, we use a metric, right, called a PEG ratio. That's one ratio that is favored by a very famous value investor called Sir John Templeton. So, yeah, so that's a good point. Just now, like I say, a PE itself is not really a good gauge. In case you're interested in this PEG, right, maybe I can just briefly share. So if you look at this term, right, you consider three alphabets. Two alphabets is PE, and the other one is G. So in other words, if you look at the PE ratio right now, yeah, remember, right, the PE is about 400. Let's give a good example, right? And the compounded annual growth rate is about 50. It's about 50, yeah? So this is G. So in other words, if you're looking at a fast growth company, we want the PEG ratio to be less than 1. So in this case, if you take the 400 divided by 50, right? So 400 divided by 50, cancel off, cancel off. So in this case, PEG, right, PEG is 8. Is 8, and 8 is bigger than 1. Yeah, but remember, these are numbers. How you want to interpret the numbers, I let you decide. But ultimately, when we are looking at the fast growth company, PE alone is not a good gauge. And then PEG ratio is one ratio favored by Sir John Templeton, and another one is called Peter Lynch, right? And Peter Lynch enjoy using PEG ratio. So if it's less than 1, it's considered good. And if you're really interested for us to do more research so that we can share with you in the simplest form, right? Canada. Oh, amazing. Yeah, is it autumn over there? Okay, if you are really interested in what we do about our analysis, now don't mind, just do us a very small favor. In the video over there, just press like, right? Yeah, so, small little like is a small little encouragement for us. And if you want us to, again, explore other companies, right, like NEO or any interesting companies that you think of, now just do us a favor, under the chat, can you just type ENCORE, right? ENCORE. Yeah, it's just a vain request of myself, right? So that, so that we can do more work. So lame, right? Yeah. Yeah, more please. Oh, so Angeline, or you type more please, or what lah, any kind of things that you like. Yeah. So again, if you want to receive any notification for our future research, and remember our goal, right, is to turn these 2,800 subscribers to 2.8 million subscribers. So I think I estimate maybe it take about 100 years of our life, but to give us a few more subscribers. Encore, oh, thank you, all the way from Canada. Yeah, please pity us by pressing the subscribe button. No, just kidding. You can always scan and then press the subscribe button. Okay, what lah? So obviously people will say what lah, you're Singaporean, right? Now, so every time we do any posting, we always have this interesting tagline. We say VIA what ni please. This is a very Singlish, local, colloquial, right? And of course, our tagline is grow via VIA. Yeah. So myself, okay. So myself, Arena, Susie, and Irfan would like to thank all of you for our precious time and watching this video. And I just like to tell everybody that we are and we represent Value Investing Academy, and our biggest mission in life is we care to make you a better investor. So with that, stay safe, and hopefully this stabilization phase will be open up. We'll be over and we can enjoy ourselves. Okay, so I'll see you in our next YouTube live. See you. Goodbye.